Ladies and gentlemen, good day and welcome to the Q1 FY24 conference call of Hindustan Oil Exploration Company Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Sumit Singhania from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to you all. My name is Sumit from Valorem Advisors. We represent the investor relations of Hindustan Oil Exploration Company Limited. On behalf of the company, I would like to thank you all for participating in the earnings call for the company's first quarter of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements or make any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us today in the earnings call and hand it over to them for opening remarks. We have with us Mr. P. Ilango, Managing Director, and Mr. R. Jivanandam, Executive Director and Chief Financial Officer. Without any further delay, I request Mr. Ilango to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Sumit. Good morning, all. Thanks for joining. I hope everyone has received the updated earnings presentation. We've also, as usual, uploaded it on our website for your reference. During the board meeting held on 14th August, board was pleased to appoint Mr. Jivanandam as the Managing Director of HOEC effective 1st October as I retire from the services of HOEC on 30th September. Jiva and I have been close friends and industry colleagues for nearly 4 decades, starting our career in ONGC. As you all know, Jiva and I joined HOEC in 2015. We worked together in every step to script this turnaround journey of HOEC during the last 8 years. Jiva has been very actively involved in the business operations of the company, and I can assure you that it will be a seamless transition. Jiva will now lead HOEC, providing required continuity as well as change to drive the next phase of its growth. On behalf of all of you and on my own behalf, I convey our best wishes. I would give a brief introductory update on Q1 and would let Jiva give the business, operational and financial update in detail. Q1 FY24 results have been adversely impacted solely on account of the lowest ever gas offtake in Iraq. Offtake by consumers was down by 66% compared to Q1 against average gross sales volume of 30 million standard cubic feet per day during Q4. Gross sales was only 10 million standard cubic feet per day during Q1. Unusually during Q1, most of the major customer plants went on simultaneous shutdowns, some planned and some unplanned. As you're aware, the field has the capacity to produce up to 45 million standard cubic feet per day without any additional wells. To mitigate the risk of reduced production due to consumer shutdowns, the way forward would be to connect to the Northeast gas grid, phase 1 of which is expected to be completed in Q4 FY24 by the GAIL-led consortium. For the next phase of development at Iraq, pipeline construction work in the difficult forest segment has commenced. It has progressed significantly with about 70% of the work in the critical forest segment already completed. This 18-inch pipeline will transport Iraq gas to Duliajan marketing hub independently without relying on Oil India pipeline network. This will enable connecting the Northeast gas grid in future significantly enhancing the market size for Dirok gas. BAT production was normal during Q1. Production from the field was resumed on 16th August after shut-in for maintenance activities since 2nd July. Produced oil from BAT is being stored in FSO to meet the tradable parcel size of 400,000 barrels required by the refining market. On all other producing assets, normal operations are continuing. I now request Jiva to outline plans and provide the operational and financial updates.
Thanks, Ilango. Let me begin with the eastern region. As stated by Ilango, Dirok field average gas production was 10.24 MMSCFP a day on 187 barrels of condensate compared to 29.93 million standard cubic feet per day and 577 barrels of oil. Virtually about, we could realize only 1/3 of what was in the last quarter. Many of the consumer plants were shut in, compounded by differential price for nominated oil fields, reduced the demand substantially for the Dirok gas. We expect some improvement in the current quarter. The existing 6 wells with some workover can cater to the demand up to 45 million cubic feet per day without much additional capital. As the field is on a continuous production for more than 5 years, we need to re-evaluate the block potential. Accordingly, reprocessing of the seismic data is in progress, and on completion of the reprocessing, geological models will be updated and reserves will be re-evaluated. We expect there would be a significant increase in the reserves of the block. We believe there would be increase in demand in 2024-25 onwards when the gas from Northeast could flow to the national grid. We would be in a better position to meet the demand as well as monetize the potential of the block. We have acquired the balance 50% share capital of a Jio&Pro, who is the operator to the block Carson. Thereby, Jio&Pro becomes a wholly owned subsidiary of HOEC. This block is producing from Lower Gurigan Formation for over 40 years and currently producing about 350 barrels. Substantial upside has been identified, which is also seen in the GCA report of 2017, both in the existing and in the deeper formations. We plan to drill new wells to enhance the production and appraise the deeper formation by drilling a well to the depth of about 3,000 meters by obtaining consent from JV partners. This would unlock substantial value in the block, wherein HOEC will be having 35% participating interest, PSC addendum for 10 years, and the mining lease has already been extended. Block 19, an exploration block called the Greater Dirok, where seismic reprocessing is being carried out for drilling exploration wells. This block, which is located between Dirok and Carson, is 100% owned by HOEC. We will release the location after the interpretation of the reprocessed seismic data. So in case of, this is about the blocks in the eastern region. 2 small blocks we are having. One is Umatra, where 10% participating interest, and another one block, Keram. We are not very keen on the Keram block, and that we will be looking for the opportunities of what do we do with these blocks. In case of offshore blocks, in BAT, we restarted the production after the maintenance work on 16th August 2023. After the recent cyclone, the flow is found to be partially choked in the oil export line, and remediation work was carried out and production recommenced. Our full production is not possible due to partial cleaning of the export line. Further studies are being carried out to flush the line fully clean. Till then, production will be continued with 1 well for over 1,000 barrels per day, and the gas rate is to be checked now. This remedial work will be carried out as soon as we get a fair weather window. Issues on the topside facilities and the constraints are addressed by one. PY1 offshore block producing under 1 million cubic feet a day to break even, while seismic processing studies are in progress for fine-tuning the new well location. After the reprocessing interpretation, we plan to get third-party specialist opinion before drilling. If everything goes as per plan, drilling will commence in the second quarter of 2024 and 25. Canday blocks. We are awaiting environmental clearance to drill 2 wells, each in Azjol and North Balol in single campaign. Possibility of increasing the number of wells will be decided after drilling the above wells for quick monetization. Associated natural gas which was flared is now being sold to make zero flaring. This is the operational update for this quarter, and I will share the financial highlights. We report that the standalone revenue for this quarter is 108.69 crores, comparing 158.78 crores in the previous quarter. Revenue earned from offshore BAT block is 83.44 crores, and the previous quarter it is 86.57 crores. In the case of Dirham, it is 21.17 crores, comparing 67.74 crores. Out of the total reduction of 50 crores, major reduction is from Dirham by about 46.57 crores. This is mainly due to reduction in offtake by major customers consequent to shutdown of their plants due to dual pricing of gas by Government of India, one for nominated blocks and one for private companies. That is, the price of gas sold by Oil India Limited is $6.5 per MMBTU, and private companies it is about $7.92 per MMBTU per quarter average. This in effect prioritizes the gas sales by oil for its production, and therefore our production becomes a fallback. In effect, our revenue realization is 1/3 of the previous quarter in Dirham. We expect better uptake in the second quarter as well as the major customers' plants started operating one by one. This trend could be reversed on completion of 256 km of IGGL line and around 401 km of Ujjaganga project, which connects to the national grid. These lines are expected to be completed by the last quarter of this financial year. This will open a new market for the gas production from the eastern region effective next financial year. In the consolidated account of the company, made a total revenue of 187.14 crores in the current quarter compared to 193.39 crores in the previous quarter. There was an increase in revenue from subsidiary companies by rupees 43.85 crores in the current quarter and a reduction from the revenue on the sales from the operating blocks 50 crores. This in effect reduced the consolidated revenue only by about 6.25 crores. Operating expenses for this quarter in the standalone account, including stock adjustment, is 79.12 crores, comparing 43.72 crores in the previous quarter. This aberration is mainly due to, in case of operating expenses, the current quarter is 73.07 crores, comparing 39.88 crores in the previous quarter. As explained in the last quarter, the revenue recognized in the previous 3 quarters of 22-23 of MOPO and FSO is adjusted downward in the revenue of 4th quarter of 22-23 by rupees 28.92 crores on a commercial settlement. Corresponding effect on this has reduced the cost of BAT in the last quarter of 28.92 crores. This was a major cost for increase in the cost in the current quarter. Oil in stock in FSO has not been sold, and the stock as on 30th June 2023 is 292,000 barrels. As on 31st March 2023, it is 187,000 barrels. Stock adjustment and credit for the current quarter is 27.7 crores, whereas 36.7 crores in the previous quarter. This difference is caused by the price variation of stock by about 3.71 crores. That is, the price taken was 78.54. In the current quarter, it is taken as 70.93 per barrel of oil. And the quantity variation is about 5.27 crores. The above are the major costs for increase in cost comparing to the previous quarter. In the standalone accounts, profit for the current quarter is 21.34 crores, comparing 107.03 crores in the previous quarter. The main reason for reduction in profit on account of increase in cost, including stock adjustment, is 35.4 crores, and the revenue reduction from Dirham alone is 46.57 crores. There is an increase in cost and the reduction in revenue that makes the substantial difference in the standalone profit for the company. Consolidated profit after tax is 66 crores against 106 crores in the previous quarter. EBITDA for the current quarter in the consolidated account is 96.86 crores compared to 139.84 crores in the previous quarter. This reduction is mainly due to poor uptake by consumers and thereby reduction in the sales revenue by 46.57 crores. The operating expenses on the consolidated account is 106.68 crores, comparing 69.35 crores. Main reason for the increase is explained in the standalone accounts. The company made a shutdown for the preventive maintenance of facility of BAT, as well as the replacement of floating hose and hauser in BAT field from 3rd July to 16th August 2023. Production has recommenced on 16th August 2023. This will have impact in the second quarter of this year. HOEC, though through its subsidiary, was holding 30% participating interest in the block Karshan, which is operated by Jio&Pro Petroleum Limited as an associate of HOEC. We are pleased to inform that HOEC subsidiary has acquired the balance 50% shares of Jio&Pro Petroleum Limited at a cost of rupees 50 crores. Consequent to the above, Jio&Pro hitherto becomes an associate company. Hitherto before an associate company has now become the subsidiary of HOEC. This in effect increased the participating interest in Karshan oil field to 35% both directly and indirectly with the right as an operator to the block. This will create synergy in the northeastern region of the company. This block potential as evaluated by GCA UK as on September 2017 is of 7.3 million barrels of reserves and 24.4 million barrels of contingent and prospective resources. In addition, the contingent and prospective resources of gas are estimated as 438 BCF per 100%. As the company has now secured extension for 10 years, substantial value in the block could be unlocked. As on date, the outstanding loan from banks in the standalone books are rupees 137 crores and in the subsidiary books 86 crores. Company has obtained a rating of A rating for 500 crores bank loan from India Ratings. With the current cash position and with the continued production, we will meet all our obligations. We would be in a position to raise capital as and when required to create value both organic and inorganic asset acquisition. Most of the operating costs are not linear and are fixed, which needs churning of assets to get better net realizable value, which we are in progress at the moment. We are in the process of developing the producing and exploration assets to its potential. Seismic reprocessing is being carried out in PY1, Dirok, Block 19, and raw 3D seismic data is being re-evaluated in Block B80. On completion of the seismic reprocessing, interpretation, and third-party review, we will embark on PY1 redevelopment in east coast of India, wherein the return of marginal capital is much higher as substantial investments were already made. Further, it would unlock value to the value of the assets which was already impaired in the books of accounts. We are also in the processing review of geological model of Dirok, and the preliminary assessment indicates upside potential in the block. Drilling in the northeast blocks will be carried out for further appraisal to enhance the production in a manner to get to the market as soon as the demand picks up by connecting to the national grid. And this is what is the operational business update. I will ask Ilangar to take it.
Thank you, Jiva. We can open the forum for question now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ridesh Gandhi from Discovery Capital. You may go ahead with your question, sir.
Hi, sir. So, we've had a number of starts and stops on a BAT over the last year and a half or two. Just wanted to understand that, again, this one which we had, which was reasonably long and, what was indicated was in case the hose had to be changed, it was only a few days of work, etc. Just want to understand, the reason behind this and whether there is, sort of a structural issue with regards to some of the development work, if we can, if this is something we should continue to expect to see into the future, or are we comfortable actually now that it has stabilized?
Thanks, Ridesh. You should. This is the first monsoon we are encountered during production, and that too with a cyclone. So we have changed the floating hose. That has initially we thought we can do it within about 7-8 days. Then we are not able to. The weather was very rough. We couldn't do that. So this is going to be more or less like a continuous process, and we need the facilities also to be
upgraded or to be repaired and replaced. This is on a continuous process as the facility was initially designed is not tailor-made to the wells. So some of the changes we are continuously making on it. Every effort is being made to make the topside facilities to meeting to our well requirements. And we never expected there would be a blockage in the export line, that we flush it and it is said to be cleaned fully. And we are talking to different experts to clean up the flow line to get the full potential of the oil flow from the export line. And this is more or less like a continuous process. It needs some more time to get into a stabilized mode on producing during the monsoon as well as the fair weather period. So it needs some time to get back to absolute normalcy in the plant actually.
Okay. And any expectation on how long it's expected to take and how much a lower offtake until then we will have, and how we should be thinking about potential risks to this actually ultimately stabilizing?
See, what has happened, we need the pressure differential of both the wells are much higher. So that has to be addressed. We are in the process of getting some additional facilities to be installed. Now, to avoid the clogging of the export line, we are now installing some hot water facilities there onto the plant itself. In the overall, at least it will take about another 6 to 9 months to get the plant to be operated in a stabilized mode. So till that too during the monsoon, there will be a small shutdown, small changes will take place, and we cannot exactly, whichever the way I say, I will be incorrect.
Got it. Sir, and the other thing is we have also increased our P2 reserves that we have disclosed in the investor presentation. Just wanted to understand, is this based on some study which we have actually conducted, and any thoughts around that?
So BIT, this is the reserves which we already disclosed. There is no increase in the reserves. Now what are we going to do is we are going to reevaluate the seismic data and that will be again updated based on the 1-year production data by GCA. That's what we are in the process at the moment.
Understood. And the other question is around Kharsang. We've now taken over as operator. Just wanted to understand what our plans are around that and the overall potential of Kharsang and also of the FY24.
Yeah, Kharsang, we have taken over now as the operator to the block because we will be owning the Geo and Pro becomes our only one subsidiary. That would be the operator to the block. The block is having substantial potential. As you could have seen, this upper region alone is producing for the last 40 years. And partial evaluation has been done with the Russian logs for the lower region and the Tipam subthrust. So these two our geologists are very bullish about it. And now what we will be planning, we will talk to the partners and drill one well, appraisal well or exploration well, whichever the name you call it, to a deeper depth, at least 3,000 meters, to find out the potential of the lower formations, that is the lower region, Tipam subthrust and Barail if possible. If the three formations turn out to be a good result, as indicated by the GCA, we will be unlocking substantial value from the block. That's where you could have seen in the investor presentation, I've indicated the resource as well as the resources potential of the block there. So we holding 35%, Oil India 40%, another our friends are holding 25%. We could make a good synergy on developing this block to a full potential. Once the gas resources are discovered, it is just 60 kilometers from Iraq, so we should be connected to the national grid, so we can unlock the value of the gas, which is not being used, which is neither flood, it is just getting back into the reservoir at the moment, and the gas potential of the block is substantial. And PY1, we have invested a lot of money, you know about that. So we will be, the seismic reprocessing is in place that we expected by end of September. Then the interpretation will take place. Then we are engaging a third-party specialist in London and they will also review the data before we start the drilling of the first well.
Got it. Sir, and any timelines on both of these?
See, Kashtan, it is basically re-evaluation that will take at least 6 months to us, and then convincing the partner and get on to it. Kashtan would be 1 year, and similar timeline is expected for the TY1.
Understood, sir. Sir, and the last question which I had was around, I know we were storing the oil and it needed to reach some amount of the capacity for us to do an initial sale. Has that happened? And then effectively, has that in turn helped us reduce our leverage, or is that, actually is still to happen?
So it is about 300,000 barrels we are holding on it. Now the tanker size is about 450,000 barrels. So the refineries are asking us to take the parcel size to 400 to get a better price. So we, within couple of, I assume around 45-50 days, we should be able to get to a reasonable size of parcel size. Then we will be asking the refinery to take that the injunction is ready for getting the price from them. So once that is done, and we are also comfortable to get out from the monsoon to offtake. So essentially, sometime in November, we will be doing the first parcel.
Got it. Understood. So thank you and all the best.
Thanks.
Thank you. Our next question is from the line of Anushri from Alpha Invesco. Please go ahead.
Hello.
Yes, ma'am, you can go ahead.
Yeah. Hello, sir. So my question is regarding DROC. So what is the current status of the DROC customers, those who have taken the shutdowns in their plant?
Yeah, I think around 50% of them have come back, and except NIPCO.
Okay. And
NRL has come back on after 73 days shutdown. They have come back, and the BCPL is will come back, and BVFCL has not yet come back. And it means actually what happens, all these customers, we have got all the contracts signed with them is the fallback as such, except 0.1 million. Now we are going for a new e-bidding as such. In that we are putting actually 50, whoever is quoting the quantity as such and the price, 50% should be on the fixed basis. I mean, take or pay basis, and the balance should be on the fallback, in a manner that our revenue stream is not getting affected. We are in the process of taking partners' approval and going to the e-bidding again. Now you have to understand there is a price. One guy, Oil India, is selling at $6.5, and our price is more than $7.5. The first priority goes for the Oil India production, right? So unless the overall demand is picked up, we will not be able to offtake our gas. So that is the situation right now. So we will be embarking on the e-bidding with the floor price and the premium on the ceiling price in a manner that our gas is getting sold in the market.
Okay. And so, sir, what do you expect would be the normalized offtake of gas from DROC henceforward, since our gas is at a premium to national refiners? Yes.
We will be expecting somewhere around 20 to 25 million standard cubic feet per day till the national grid get connected. Once that comes on it, there will not be any demand restrictions. We will ramp up the production, and by drilling 3 more wells, we can go up to 70 million cubic feet of gas per day.
Okay. And on for BAC, so the average volume of oil was around 1,158 barrels per day. So what would be the normalized oil production that we expect going into the next few quarters? So Q2, we know that there was a shutdown, but after that, what would be the normalized flow?
See, the normalized flow we expect, because what happened when topside issues are fully resolved, and then these 2 wells are able to get connected. we should be crossing the threshold in a way that our revenue model as such, we were looking at around the $300,000 per day. That is the revenue mark we are looking at, both oil and gas. So accordingly, our production would be ramped up.
Okay. And so earlier we had mentioned that 250,000 would be the parcel size for oil. So the refiners that you are mentioning, so why did they increase it to 4 lakh barrels? So
yeah, I got your point. What is happening is, then whatever the differential tariff it comes, that affects about $3 to $4 per barrel the price to us. Because the tanker, which is having about the high capacity tanker, we used it for only for 50% of the volume therein. The price, the charter rates and the coming and going and all the rates as such, if the refinery wants to pick up from the outside plant of our facility, then they will be quoting a lesser price, which we expect about $3 to $4 per barrel. So we thought that $3 to $4 is a bigger sum, so why don't we wait for 1 or 2 months and get to the full uptake of 400,000 barrels.
Okay. And sir, just one last question. So in this quarter, we have mentioned that the gas volume from BAT was around 12 MMSCMD. Whereas in last quarter, we had mentioned that Q4 average production was around 16. So can you explain why there is a difference in Q4 gas numbers?
See, there is an averaging error as such. Instead of 365 days, the actual number of days were taken. So when you look at as such, 194 days was the field on operation. So that was taken as an average production per day. But whereas when we looked at the overall number of 365 days, when we give it as a company as a whole, we took it as divided by 365 days and corrected it.
Okay. So the correct numbers are then 12 MMSCMD.
Yeah, that's right. Previous quarter number was correct if you take the divide by 194 days.
Okay. Thanks, sir. That's it.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Ashwin Reddy from Samatva Investment. Please go ahead, sir.
Yeah, hi, good morning, sir. So my first question is on Dirac. So could you let us know right now what is the offtake like? Is it like 15 units, 20 units, or what is the average we expect for this quarter?
In July and August, we are witnessing somewhere around 18 to 20 MMSCF per day.
Okay. But the primary fall is only the shortfall, or is there like a new suppliers come in with, whom you're competing with, or what is the scenario there?
Primary reason is that there is no demand for offtake. Because the shutdown of the plants, so then once the major, these are the 5-6 plants which are consuming the gas there. And if that is shut in actually one by one, then what happens, the quantity goes only to the tea gardens. So that is the reason the Oil India produces associated gas, that they cannot flare it. Then they will be pumping into their line. So that, and the price also lowered for them. And the first, it goes as the first tranche, it goes from Oil India production, then only it comes to us.
Okay, got it. And my next thing on BAT, sir. So on BAT, so in the opening comments you mentioned that this could take 6 to 8 months to stabilize and all. So how do we understand as an investor? Because we've been so BAT has seen lot of ups and downs. I understand it's a very complex operation. It is offshore. I mean, things can go, and some things cannot be in your control. I understand that. So for our understanding, should we say, for example, just budget the operational days as 200 days or 250 days a year? Is that a better way to see it? Because will we keep having these issues, or how do we think about these? And is there like a permanent solution, or will it always be where you'll have to work through the solutions, and that's how you think about BAT?
Yeah, I think this until another 7 to 8 months. So what is happening is this plant was operational for about continuous operations for about only 6 to 7 months. So after 7 months, we got met with a cyclone. After the cyclone, we are changing the hoses, which was an old hose which is getting replaced. Now we have to get the export sites to be cleaned up. That will be get over by the month of October and November. And during this season, we will make ourselves fully prepared for the next monsoon when it comes on it. So on an average, it is it's safely to take about 330 days production. That should be a reasonable assumption for us from the next financial year on.
But until we get this, say for the next for this quarter, next quarter, and subsequently, so what should we think about the volume output in terms of oil and gas from BAT for the next 2-3 quarters? And what is the number?
I think it is too much of a presupposes. I can't make it at this stage because we are doing our endeavor. Because what happens if there is a small constraint there, then you have got one well is to be closed, other one should be open, right? So our current level of production, what we have it in this the last quarter of this year, we were trying to get it on the third and fourth quarter. That's our endeavor research. In the process, we got a setback. There is a cyclone. There is a clogging on the line, and now some topside issues are coming. So we have to address one by one. To get back to the stabilized production as an oil field from that field, it takes about at least minimum 6 to 9 months as such. So then we will be knowing better about the field as well as the facilities, and by the time we'll be experienced of at least 2 monsoons. So we'll be better prepared for the third monsoon, and you look at as such as it is an oil field for a longer period. At least you should give a minimum period of 2 years to get to know the full potential of the block and then to get a regular and uninterrupted production from the field. So that's what we are looking at. So at least 6 to 9 months, it will have an aberrations and corrections, and it will go on as happened in the last 2 quarters of that year, and we will get back to some better understanding before the next month.
So what would be the amount of money needed? So what is the capex required to get the field again back in order for the next 7 to 8 months?
The capex is not much higher. It is only about 6 to 10 crores. That would be the level. But what is happening is it is the issue comes up. That is where its problem comes. When you sort out one issue, small problem comes on the other issue. We have to address it. And we are mobilizing the additional resources of people also, in a manner that we will have both the technically competent people are operating on it, and at the same time the facility is upgraded to meet the requirement of our oil, our wells as such.
Got it. And my last question, sir, is on the surprise announcement of Mr. Elango's retirement. So some context on that would be helpful to us because this is not expected, at least a lot of markets are not expecting it. So some context, and also would he remain as a consultant to the company, or how should we think about this going ahead?
I think Elango can explain better. Ashwin, what I would request is, I'm sure a few others will have a similar question. I would address all of them. I'll note down the question. I'll address them together at the end so that the discussion on the business continues.
Okay, all right. Thank you so much. Thank you.
Thank you. Our next question is from the line of Rikesh Parekh from Rockstud Capital. Please go ahead.
Thanks for the opportunity. Just wanted to understand, in the beginning we talked about Khiram block, we are going to discontinue. So any cost or one-time write-off we are going to take on that?
No, nothing, because it's a very, very small expenditure which has already been charged.
Okay. And in case of this closure of BAT, any financial impact on us from the GSPC, means from the committed offtake, will be incurred on us?
It's an annual adjustment. I don't think it will have an impact much.
Okay. And last, on the DROC, my understanding is that the national grid is expected by December as such. So by when, any update on that, when we are expecting this national grid to come up and we can see the normalized offtake once it is integrated?
See, as per the plan and everything, what we receive from the information is the two lines are supposed to get connected by February and March 2024.
Okay. And when is our connectivity or the additional line what we are looking is going to be completed?
This is actually a two-season work. Now only portion of the line at the portion of the line in the mountain area has been completed. Now the balance, what we are looking at, there is an Oil India line. We will tie it to that line till our balance line is get connected. In a manner that if the demand picks up, we will be ready to supply the gas.
Okay. No, I want to understand that if we can, once we connect to the national grid, so by when will we be ready with that directly to the national grid?
That's right. Because see what happened, demand is the constraint, not our ability to supply.
Mm-hmm. Okay. Thank you. That's it from my side.
Thank you. Next question is from the line of Manan Patel from Aravet Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, first set of questions on BAT. So, is it right to understand that once we solve these problems in, let's say, 6 to 9 months, is there a possibility of recovering all the like substantial loss of production that has happened during these few quarters? So that is one. Secondly, from what I understand, the equipment. So just to reconfirm, the well is okay, but the equipment has a problem. So if you could outline what all equipment have a problem and what all we need to do to resolve that. And lastly, on BAT is when we talked last time, we wanted to have a 2 lakh barrel buffer, and then on top of it 2.5 lakh we were planning to trade. So now do we understand that we will have a 2 lakh barrel buffer, and then on top of that 4 lakh barrel basket would be traded? So these are the questions on BAT.
BAT, any oil field, actually the loss of production is the loss of the time approach. It is a below the ground value as such that can come as and when we get ready to produce from the top side. So it's only the time difference of the value that is an impact on that. And the second thing is about your equipment failures. Yes, we have an equipment issues, which is our GDU, and everyone we have got the HP separator repair is over. Then we have now kind of doing something with the GDU. Then we have something to do with the compressors. We are working on it. Every equipment we are bringing it in such a manner that suits our requirements. So that is the reason as such. Now we cannot specifically say this equipment is to be changed, that equipment is to be changed. Overall, all the facility equipment is total to the requirement of our wells as such. That is why it takes more time on it. And we are not expecting the export flow line would get clogged, and that we are getting cleaned up. So these are some of the issues which is anything like any oil field will have a teething trouble for about a couple of years. That we are in that phase. Once that is over, we will be in a better position. And the third one, the initial parcel size, which is in the East Coast and West Coast, was considered to be about 250 barrels. Now we are all the refineries are going through the auction is a mode for quoting the price for it, and they were looking at a parcel size of around 400,000 barrels. This we get to know when we went to the M junction for auctioning the crude assets. Now no individual, we cannot enter into a contract with the one person for the offtake assets. We have to go through the M junction for getting a price there. So when we are looking at the price impact, it is better to sell at a parcel size of 400,000 barrels. So that's what we will be doing on it in future.
Okay. So, but we still have a buffer, so we need a production of 6 lakh to have a 2 lakh barrel buffer and then sell 4 lakh. Is that right understanding?
What is happening is, that is the buffer as such. We thought of a continuous offtake of 2,000 barrel to 200,000 barrel on a continuous basis. Now we will not be doing that as such, because whatever is the unpumpable quantity, but for the balance we will pump it out.
Okay, got it. So second set of questions on Kharsang. So you have mentioned the prospective reserves, which seem to be almost even better than B80. So by what time do we get to understand the 2P part of the reserves? And when are you planning to drill appraisal wells? And what kind of capex will be required for that?
To unlock the value of that appraisal as such, we need to drill one deeper well. The deeper well is about, say, $15 million it would cost as such. And in that, our share would be about $5 million. So $5 million. That's an exposure of about 40 crores. That we need a consent from the Oil India and our other friendly partner as such. So we will talk to them, and our geologists and their geologists will review the whole thing as such. And based on that, we will start drilling on it. It will take at least, as I told you, it will take about a year as such. 1 year project now.
Okay, I got it. And lastly, sir, I wanted to understand Mr. Ilango's retirement. So he said he would evaluate. And sir, we have faced this issue of communication. So if Biparjoy disrupted production, it would have been better. We could have disclosed that to the exchanges. It was a very material event. Even for DROC, 3 potential clients stopping production, that would also have been a material event. So it would be great if we have faced this in the past. So it would be very prudent for you to disclose all these things in a timely manner so that market doesn't lose the trust on HOAC. We have been very good in disclosing everything, but a lot of times it happens, it comes very late to the market. Right now we have again started production, and then we are disclosing that the B80 was shut in for almost 1.5 months. So the market, you can look, market doesn't look it in a favorable manner. So it would be great if the disclosures are timely. Thanks a lot for your answer. Thank you.
Thank you. Our next question is from the line of Vishal Prasad from VP Capital. Please go ahead.
Hi, good morning. Sir, in the last call, we have mentioned that the offshore tanker capacity is 9 lakh barrels. And today we have mentioned that it is 450 lakh barrels. So,
No, I have not mentioned it is 450 barrels.
So total capacity is 9 lakh, and we will be able to store 9 lakh, is it?
Yeah, that's right. See, what has been mentioned is the parcel size of the, when we deliver to the buyer, the right parcel size would be 400,000 barrels. The capacity remains 900,000.
Okay. And the second question, in the past we have mentioned that for B80, once we have enough oil in the tanker, we will be sending the oil to the prospects for testing. So how is the quality of the oil, and with respect to Brent, would we be selling at some discount, or will it be in line with the prevailing oil price?
So crude assay would be given to the refinery. Based on that, they will quote a price. Once they quote a price, will be crude quality of the crude is better than Brent. So we will be knowing once when quote a price.
So right now we are not sure about the quality of the oil?
No, the quality of the oil is better than Brent. That's what I'm saying.
Okay, it is better. And sir, last question, starting 2020, the first monsoon in 2020, and this is the fourth monsoon. First 2 years it was COVID, but we keep on facing different set of problems every year. And for one reason or other, we tend to push the final production by 8 or 9 months every year. So I am somebody who doesn't understand the challenges we face in a offshore field. So could you help me understand, is it the problem with the vendors that we have, or we don't have the right skill set within our company, or this is very common in Bombay High that everybody who goes there faces the same set of challenges?
So you are right that whatever you three mentioned, it will get compounded in this manner. That's a fact of the matter. So the equipment supplied by the contractor was not to the mark. And second thing, these wells behavior, the wells which we are getting, what the oil quality of oil we are getting, the pressure regime we are getting, this facility is not in accordance with that requirement. Third one, we are being suffered by the 2 cyclones also. These 3 things are compounded the problems.
So going forward, just assume that cyclones are not happening. Are we, within our own discussions, are we confident that probably next 1 year or 18 months, there will come a day when we are not facing significant challenges and we are able to produce for 330, 340 days without any hindrance?
We are working on it. We are resourcing, we are mobilizing the right technical people now, and we will be able to come out the problem on it, because it is almost, it is not the thing we cannot resolve it or anything. So it needs the resources, and we are in the process of getting the right technical team. And the team is, as we are speaking, we are engaging different contractors and who are specialized in this own operations. And then we will be getting our own team warm up to the requirements and get the new people also on board. And that would be on the resources side. And the rest of the things, we are tightening the contractors in such a manner to rectify their own equipments and have enough spares in the field. So, and we pray God, if the weather is good, we should be able to come back to normalcy.
So, sir, last question. Both of you have worked in this industry for 4 decades, and you must have seen these challenges which are happening now. So, when we hire people in our company, is there something which we are not doing right, and because of which we are not able to evaluate the problems which may happen in the future? And every time we say that, we could not foresee this problem. And do we need to hire more people who have the right skill sets?
By hindsight, it may be right, but any hindsight analysis will throw some of these things not taken care properly. But at that point in time, we thought we are doing the right thing, but which turned out to be incorrect. So we are correcting it now.
Okay. Thank you, sir. All the best.
Thank you. Our next question is from the line of Chitresh Lunawat from Gardeners. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
So my question was from the management is the BAT shutdown a material event for the company or not? Because it was not disclosed to the market and we came to know only from the PowerPoint presentation.
It's not at any point in time it was expected to be completed within about 6 to 7 days. That was the duration of the job.
As investors, we have already, even last quarter also when it was shut down, I'm not sure why management is not, disclosing it in the thing. See, whatever action you take and how much time it takes, a different thing. We can send a notification again saying that, it started. But to a shareholder, it's like putting in the dark, right? So, you're not informing the shareholders on the things, what is happening in the company. So there are so many companies which have so much better standards of informing shareholders if there's a factory shutdown or something. And
one thing I would like to submit, in oil and gas operations, well shut in for today and opening within 2 days, it is a regular routine. And this cannot be on a continuous basis to go to the market and inform us. That's why once in a quarter, we will give you the update on that, right? So now tomorrow, if I say that, yes, I'm shutting down this well for today, then there is an impact. And then within 2 days, I'll be saying I'm reopening this well. So I will be in a continuous process of sending the messages, which will give you a wrong signal. So that's why once in a quarter, we will update you on all oil and gas operations which are happening on it. If we are going for a value degradation, suppose the wells are not flowing, the wells are not possible to open, there is a permanent damage to those value to the company, then we will come back to the market and inform immediately.
So the line for the current participant has dropped. May I request the management we move to the next question, please? Our next question is from the line of Dharmendra Vora from Vora Wealth. Please go ahead.
Hello, I'm audible.
Yes, sir. Please go ahead.
Yeah, I think most of the questions from my side have been answered, but still there's a small request to observe a 20-second silence to mourn the demise of adequate and timely regulatory disclosures to the stakeholders.
Okay, that we will do. Can we move to the next question, please?
Yes, sir. Thank you. Our next question is from the line of Nikhil Somani from SC Lowy. Please go ahead.
Hello, sir. Thanks for taking my question. My question was around B80. I wanted to understand what is the future capex plan or the field development plan for B80. In the sense, when are we expecting capex for drilling new wells potentially to ramp up the production? That was my first question.
B80, we wanted to have an uninterrupted 2 years continuous production. So after that, we will start drilling the third, fourth, and fifth 3 wells together. That would be expected around 26, 27.
Okay. And what would be the capex, budgeted capex for that?
Be about another $40, $45 million.
And this would be our share or 100% share?
It's 100% actually.
Got it. Okay. And I look at the 2P results number for B80. If I'm reading the numbers right, so 25 billion barrels of oil and close to 65 billion cubic feet of gas. Am I understanding it right that the total revenue potential from the field could be close to $2.5 billion at, say, crude at $70 and gas at $10 per MMBtu?
Yes. If you take that, that is the value potential of the block in the top line. Then you have to have the government share. Then you have got your operating expenses. Then you have got your...
Yes. That's it.
After that, that is the value potential of the block as such. But say you are right. That's the reserve numbers we have got and got it certified by GCA.
Got it. And on the operating costs, I understand last quarter you mentioned we were running at operating cost of around $140,000 a day. Is that the right number to assume going forward as well, or was $140,000 a day relatively high on account of these one-offs that we have seen in the last 12 months?
That is actually on a standalone, that should be the right number. But on a console, we get a revenue credit for our own 2 facilities we are getting operated. That is about $90,000.
Got it. All right. That's it from my side. Thank you.
Thank you. Our next question is from the line of Ajit from Nirzar Securities. Please go ahead.
Hi, sir. Am I audible, sir?
Yeah,
yes, sir. Please go ahead.
So, sir, my first question is just a clarification. You in your opening remarks told about the operating expenses, the reason behind. I did not understand that. And could you please elaborate that thing and resultant decrease in our EBITDA margin? And sir, what is our current production in the BAT field? And is there any revision in the reserves? That's it.
So there is, and I go with the last question. There is no revision in the reserves at this moment. And that your first question, I've explained to you in the what has happened in the previous 3 quarters of the last year. There is a revenue on account of the MOPU and FSO has been booked there in there, right? When we get it, the parties are explained the duration which they were not operational, you should take them out from the revenue assets. So we have reduced the revenue of the MOPU and FSO in the 4th quarter. That you can have seen that, that is reflected in the notes to the accounts also. That is in the console accounts. You could have seen that. Correspondingly, whenever there is a revenue reduction of the MOPU and FSO, that gets reduced in the operating expenses of the BAT field, right? So that was an aberration on the last quarter adjustment. That current level as such is for the right number as such. So that's why when you look at as such, in this quarter, there is an increase in the operating cost because of that adjustment happened in the last quarter of the last year.
Sir,
So
and on
the cost which you are projecting right now would be the cost for 90 days operation of the 380
okay, and sir, current production in BAT, sir?
So we are producing as we have opened the well yesterday, and we are producing about 1,000 barrels of oil, and the gas rate I've yet to get. And
Sir, is this the normalized cost you explained just now about the operating expenses?
yeah, that's right. That is for the standalone accounts. $140,000 per day is a normalized cost.
Okay, no worries. Thank you so much, sir. Yeah.
Thank you. Our next question is from the line of Jagveer Singh from Shade Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. My question is related to the share of expenses from producing oil and gas blocks. So, on the same revenue, even revenue is 3-4% down compared to last quarter. Our cost, this item has increased from 42 crore to 75 crores. What is the reason for this, sir?
Same. The standalone accounts you are talking about?
No, console account.
Yeah, Concall accounts, as I explained to you, in the last quarter of the last year, there is about 28.92 crores. You could have seen the notes therein. The three quarters previous revenue has been reduced in that. So when I reduce the revenue of the FPO and MOPO and FSO, the corresponding reduction in the cost therein. So that is what happened in the last quarter adjustment. So we can get back to the normalized cost in the current quarter. That is the reason there is no cost increase per se as such. We are continuing to operate on $140,000 per day as such for the total cost basis.
Okay, so going forward, if suppose we do the revenue of 190 crore total revenue, so this item will be around 75 crore.
Yeah. See, what has happened was that if you look at the Concall accounts, the difference is only on account of the revenue reduction from the DROC.
Okay.
One side there is a revenue reduction, another side there is a reflect the cost, come back to the normal cost into the first quarter.
Okay. And sir, Q2 for some time BAT is closed, so any idea in the Q3 what kind of revenue at console level we can do, sir?
I don't want to project any revenue projections at this stage, so it would be incorrect in either way.
Okay, no, but can we do the revenue like in Q1 or Q4 type revenue?
So, I mean, we hope to do better in the third and fourth quarter. But
okay.
Putting some numbers therein, because I have to look at so many variables, what would be the price, what would be the volume, there is no disturbance, nothing. So many factors are therein. It is not to project the numbers therein. That's what I think.
Okay, sir. Thank you, sir.
Thank you. Our next question is from the line of Rikesh Parekh from Rockstar Capital. Please go ahead.
Sir, with regard to BAT, we would like to understand, are we back to that production level of 3 to 3.5 lakh per day?
Not yet.
Not yet. Okay.
Yeah.
And by when can we expect? Means it is after that slurry, the pipeline means we are able to clogging, will be able to do it, or it will take time?
So what is happening is we have reconnected the production. Now when we will be doing the underby hose report after the monsoon, that time we would like to flush the line in a manner that comes back to its original position of can take up to 300 barrels, 250 barrels per hour. Right now it is about 50 to 60 barrels. So what is happening is that all systems are get connected. Once we are going to do the repair work in the month of October and November, that time we will flush the line fully.
Okay. And last thing is for PY1. So have we formed up any drilling vessel or something because we were planning somewhere in January for drilling?
I told you in PY1 we are in the seismic reprocessing. Then they have to be completed with the interpretation. Then the third party review. Once all is being done, when the location is ready, then we will start mobilizing the rig and other facilities. Because this is we will be drilling a well and then we will not be completing it. And if it is successful, then we will drill another 2 wells, then complete all the 3 wells together. That's what our plan is.
Okay. Thank you. That's it from my side.
Thank you. Our next question is from the line of Rohit Potti from Marshmallow Capital. Please go ahead.
Thank you for the opportunity. So my first question is on, so what new field do you expect to be on revenue mode next? Is it going to be Kharsang or is it going to be PY1? How do you think about that? And on related note, do we think we need external capital to raise that, either loans or equity? Because there was mention of equity by Jiva sir in his opening remarks. Do we expect us to issue equity for any of these capital raising plans that we have? And on balance sheet, again, the question is, how do we see the balance sheet evolving over the next year with the capex plans, but at the same time cash flows coming in from DROC and BAT?
See, what is happening is there are 2 ways of looking at the things now. The reprocessing of the data is in place for all the 3 blocks. You look at one side, PY1 is getting reprocessed, and then we are looking at the Kharsang also we are reevaluating. Based on this, all these things, how the data comes out, to be our best of our understanding, we should have a better data there. Then we look at, then you have a monsoon there in the East Coast, and there is a rainy season in the Assam region. Accordingly, we will plan in such a manner that where to go for the first one. So we look at the capital expenditure, which should be in the order of PY1, about say 70 crore initial capital. So that should be from our internal accruals. Then you look at all this in the range of less than 100 crores. So we will be able to manage internally. And if you are finding it extremely difficult, then we will be borrowing it.
Understood. So this was helpful, sir. Almost all other questions have been answered. I just want to reiterate the question on Ilango sir leaving. I mean, it's been 8 years. It was a pleasure listening to him also on this con calls all this time. This departure is seems a little sudden, and the fact that I mean, it seems like he will not be on the board going forward. So it will be great if you can get clarity on if he's retiring from the oil and gas field for good, or will he be available as a non-executive member of the board or as a consultant, and what led to the departure is something that some of us are very curious to know. So it would be great if some clarity can be provided on this. Thank you so much, and congratulations to you, Jiva sir, on the appointment as the MD. Thank you so much for the opportunity.
Thanks.
Thank you. Our next question is from the line of Chetan Phalke from Alpha Invesco. Please go ahead.
Yeah. Am I audible?
Yes, sir. Please go ahead.
Yeah. Thank you for the opportunity, sir. Sir, I think my question is on BAT. So since we are continuously facing some of the issues on this block, so is there any thought process to get a strategic investor or some other expert investor who can help us in managing the block in a better way? I mean, is there any thought process to get an outside investor and part with some of our stake? Just wanted to know that. And second thing, sir, is there any issue with the contractor, Expro? I mean, is there any thought process to change our contractor, getting a new contractor going forward as well? So, yeah, would like to know on these things.
So, considering the value in the block, we don't want to bring any more investors in the block. That is the first question. Second thing, the contractor remains to be a contractor. We have been in discussion with them, and he also understands the constraints, and we also understand the problem of what he is facing on it. We will try to make an amicable. We did an amicable settlement with them. Now they are also embarking on a process of rectifying most of the things, and we have no intention of changing the contractor immediately. Third one, we are resourcing ourselves. We are getting some technical experts and process guys and marine people would be on board with the company they are on to strengthen our own operating and maintenance team of these facilities. So that's what I can say at this stage.
Okay. All right, sir. Thank you very much. That was it from my end.
Thank you. Our next question is from the line of Manan Patel from Aerovath Capital. Please go ahead.
Thank you for the opportunity again, and congratulations, Jiva sir, for the MD appointment. I just wanted to ask, have we started the process of looking for a CFO, or do we already have someone in the team who can take up the mantle?
Yes, we have given appointment order to one gentleman. Once he accepted the order, and he will be joining as such.
Okay. Got it, sir. That's it from me.
Thank you. Our next question is from the line of Vishal Prasad from VP Capital. Please go ahead.
Sir, one follow-up on BAT. So, given your experience of last 40 years, so once things settle down in Bombay High, do other companies who operate there keep on facing such issues, or finally we can expect that a day will come when we will have smooth operations there?
So we expect a day to get a smooth operation therein, because everybody who is having a floating structure is having the problem therein during the monsoon period. This is not only for us. Even the field of Panamukta, they had some trouble. And whoever is, because we are the only floating structure therein which is having an SBM, and another one is a Panamukta. So both of us will have some trouble during the monsoon period. But how to be manage ourselves, that's a bit of an experience to us. So we will be better prepared in the next time. So the learning will make us better. That's what we believe.
Okay. And sir, you will be starting from 1st of October as the MD and CEO. So what would be your priorities going forward?
So our priority going forward is, see, one side, the top side facilities, whatever the small things which they can do it, which they are working on it, that they will be doing on it. From our side, the underby hose, the marine system per se, that is an FSO, SBM, and the export line. These three areas we wanted to strengthen in a manner that the export flow line, why it is clocked, that has to be studied. Then to avoid the clocking thereon, what should we do? And to the underby hose, if there is any issues thereon, which we will replace it with the new hose. Now we are getting a 10-meter hose as such, not a one single hose. And then we are doing Arcoflux is doing some study on it, how the mooring system, how has to moor it in such a way it will weather wind even in the worst cyclone. These are things we are planning to carry out from October, November, December before and ready for the next monsoon. We would like to have necessary spares such as houses and tape chain, and what are the spares are required to get on to immediate replacement. This is being studied now. We are engaging an experts who are specialized in this field to do this job. So in a manner that we will be prepared for the next monsoon, and by another 2-3 monsoons we will be get used to the situation and to manage better. That's what I can say at this stage.
So it seems, sir, I mean, we are trying to learn from our mistakes. So do you think we have the requisite skill set within the company now, given the experiences we had in the last 2-3 years?
So we are in the process of getting the required experience. We have some experience within the last couple of months. We have got some people on board. They are doing the repair works, and we will be recruiting the people and required consultants thereon who had a relevant experience and expertise thereon to it to manage it.
Okay, sure, sir. Thank you.
Thank you. Our next question is from the line of Tejas Shah from Laser Securities. Please go ahead.
Hi. From the BAT gas I missed out. Right now, how much we are producing out of the BAT gas?
No, I told you, no, I didn't know the rate at the moment. And once the wells are completely put on production, I'll get to know the rate and I will let you know. We should be.
So what I can request this time, at least inform the market when the gas starts and what flow level is starting, because there's a lot of disparity, I can say, or anguish in the way things have gone. Maybe not in your hand, but at least in terms of the communication and the disappointment that as an investor we have. Today I sold up all my stocks in my account in loss, because absolutely there is no, as a shareholder, I have lost the faith. That is what I can tell you. So
Tejas, I wanted to tell you that because what is happening, this is an oil and gas field operations. Some repair will happen, some shutdown will happen, and during the monsoon there would be an inevitable shutdowns will happen. So these things we cannot go on and off daily in the morning and evening as it's a regular report. So that we are giving an update once in a month, once in 3 months. And if we have a major impairment to the assets per se, then we will immediately come to you and explain in the market. So we cannot say that's a difference of the cash flow that would impact the company substantially. It cannot be the basis for reporting on a daily basis.
It is your perspective, but as an investor, I share my perspective. Anyway, now can we understand how are we going to work on the working capital, because BAT is a major flow that is going to get logged. Plus your DROC, the optic is not that great for next another 4 months or 5 months. So how are we going to work on the working capital and the loan which needs to be repaid, and also work on the capital requirement to repair or order new thing or embark on a new project? And also if you can share or throw some light on the DROC, I think in the this thing presentation you have told we can take it to 70 BTU by next 6 months or with a new well. How much time that will take? If you can throw some light on that.
They have explained DROC, the offtake is getting better in the second quarter, right? So we have to manage within the revenue we are getting at the moment. So we are not finding any working capital issues coming up immediately. Our investment decision is going to be about 8 to 9 months down the line. So by the time we should be stabilizing ourselves to get a better cash flow from the existing assets which are producing. And if the work comes, we will be taking some short-term loan and repay it if we have already committed to the capital. Now you have to understand this, all the capital which we are talking about now is a discretionary capital. It is not a mandatory capital. So whatever the capital we are infusing into the company to create a value there. Right. So we are not finding any working capital issues, and you should be aware that we are having about 300,000 barrel of oil. Once we sell the oil stock, then we have got enough revenue to meet all our obligations.
Okay, thank you.
Thank you. Our next question is from the line of Ralston Lewis who's an investor. Please go ahead.
Yeah. So, Mr. Lango, I just want to say that the timing of the announcement of retirement, right, is something which is a little bothersome for investors like us, because as you said, BAT is like the flagship discovery for Hindustan Oil Exploration Company, and there are certain challenges which we are already discovering. It would have been great that that there are some able hands to manage the company out of a sticky situation at the present, where things get stabilized, and then the DROC thing, the connection becomes connected to the national grid, and then you've got the PY1. So besides Jeevan sir, if there is any able leadership which can manage the situation and bring it into a stabilized situation. And hopefully, Mr. Lango, if you can continue with the consultant role, because your expertise would be highly required by the company, and it will be like a reassurance for the investors for holding on to the promise of having a very stable outlook in terms of revenue. The second question was with regards to the windfall tax. Is there any impact of that which has been coming up? And the last question is in regards to the APM, which is now changed from 6 months to 1 month. Is that something which is going to be impacting in a large way over the revenue in terms of the gas prices and the oil prices? Thank you.
So last two questions I'll answer it. First question Nilango will answer. Okay, the windfall tax, there is no impact. There is nothing to do with this company at the moment. And the gas price is having a dual pricing, but now it lost its impact now at the moment, because every company is going through the auction process. In the auction process, it is a plus or minus. So we will be discovering the price, and the price will be the basis for it. It is more or less like a benchmark pricing, I think. So now, Nilango, you can explain. Okay. Let me take just step back and look at my career briefly. Look, I've spent close to 40 years in oil and gas. And when I left Kane in 2014, I really never imagined that I'll get an opportunity to play a leading role to turn around a 40-year-old company like HOEC. And this turnaround would not have been possible without Jiva. It did everything together. So in 8 years, HOEC operated production kind of grew from 500 barrels of oil equivalent to 10,000 barrels of oil equivalent, which is support of a less than 100 employee team. And to me, really, that gives me an immense sense of satisfaction. If you really look at where the business is today, every quarter is a bit dynamic. As I said, Virok was totally unexpected. The offtake issue, it's a fantastic field. And the fact that the field is going to be connected to a market like Guwahati by end of this financial year, and we have the ability to just increase the production to 45 million cubic feet, and the price is really moved up to a very decent number. Some of you would recollect that Virok was operating at $1.6 per MMBTU. From there, today we are talking about $7, $8. So Virok is absolutely in a fantastic position, and whatever offtake issue is a very, very temporary issue. Jiva outlined to you very clearly that Karsan and increasing our stake in Karsan is a huge statement on the belief we have about the field. And it brings us a lot of energy, synergy, and with the gas grid, even a gas potential in Karsan could be developed. So Northeast as a whole is going to really, really grow, and the company is well positioned to execute the projects there. BAT obviously has been a focus of multiple questions. I just want to take a step back and look at it as when we ventured into this field, it was a field which ONGC left as not possible to develop economically. ONGC did not find it economically viable to develop this field. That's why this field came into an auction mode. And when we chose and bid, obviously one of the important, to make a field economically viable in a price environment which cannot be very predictable. The only thing that you can control is cost. So we went in for a bit of an innovative model, focusing on a low-cost model. Now, we took certain calls, which in hindsight, they're maybe not right. And as we brought this field into operation, one thing to remember is whatever was the initial resources estimated at the time of field development, subsequent technical work done by the team, as well as the wells drilled, has increased the resource base significantly. Therefore, you have a field which has initial issues which are being addressed, particularly during monsoon. It's very difficult to predict the intensity of the weather. So when something goes wrong, it is easily fixable. But if the weather is not permitting us to go access and fix it, then one can't take a risk beyond a point. So I don't really see, if you look at the previous quarter in which we had the quarter before that, we had the full quarter, first time, both the wells were producing very well, and we saw what that could do to the organization as a whole. So once again, and in BAT, there are still remaining challenges, but I believe the team that is managing it, we all worked as a single team, took all decisions together. There is no gap, there will be no gap, and as Jiva outlined, there's an effort to adding more people. In the last few months, we've added people. We'll continue to add and bring, strengthen the operating part of that team as well. So there's no doubt in my mind that value is very much in place. It is about just addressing some of the operating issues. There's a very interesting quote that says, in life, you never fail. You either win or you learn. So I am at a point where I've had a good share of both in HOEC, and I thought after 40 years this is the right moment to say bottoms up on barrels and spend quality time on other personal priorities of my life. There is nothing more or nothing less to it. As I told you, not only Jiva, the entire board, very, very friendly, very, very respectful. In fact, Jiva and me, we're actively involved in, inviting each of the board members to join us. So it is, I still continue to feel it is, I'm part of this company. I am going to be available anytime on call as required. We live in Chennai, so my support and assistance will be if and when required. Now, when I began my career, one of the important principles is that I at least followed is while every employee is valuable, no one is indispensable. That's the principle under which you need to operate a company. I have full confidence that the team has the ability to deal with these short-term operational issues and come out stronger as such. I would like to convey my deep appreciation and gratitude for all the support. Thank you.
Thank you. We move to the next question. Our next question is from the line of Veer, who is an investor. Please go ahead. Mr. Veer, your line has been unmuted.
Am I audible, sir?
Yes, sir. Please go ahead.
All right. Thank you. Congratulations for all the patience you've showed with the BAT and the shareholders, as we have been asking you all along for this field. So I would really heartily, honestly congratulate you, because I know this field, it's not easy, an offshore field. And you've been sailing your boat on and off, which is a very good thing that the boat has not come down. So thank you for showing so much patience, sir. Now, I had 2 to 3 questions. Hello?
Yes, sir. Please go ahead with your question.
Yes. The first question is, DROC, by when can we expect a complete offtake, which was happening in the last quarter?
It should be expected once the national grid is get connected. That would be on the next financial year, not in this financial year.
So if I understand correctly, for the next 2 quarters, the offtake would be 100% less 66%. That is like 34%, right?
Yeah, 1/3. Now we are coming back second quarter bit better than that, somewhere around 20-25 million cubic feet per day against 30-35.
So that would be 35-36% of offtake.
Yeah. Now instead of 2/3 reduction in this first quarter, it will get reduced to 1/3. That's what it is.
Okay. And sir, I was a little confused with BAT. I think it was closed because of the cyclone which came in May end, right?
It is in the June actually, middle of June.
Okay, so we had shut the field from middle of June or June beginning or May end?
End of June, we survived the cyclone comfortably.
So the production was on.
Yeah, we have survived the cyclone. We have completed the June as such. And July, we wanted to go and check all the equipment. Then we found some of them have to be replaced. That has taken the time. Then we have to shut it.
Okay, sir. And another thing is, now that the field has already started, are both the wells on?
No, we have started with the one well yesterday.
And that would be D1 or D2?
D2 well.
D2 well, which is a major gas producing well. Am I correct?
That's it. Yeah, that's it.
Sir, any idea when, like a ballpark idea, when would we start the second well?
No, I don't want to commit any time on it because what is happening is that the ability to the export line. The export line can accommodate more volume than what it is. So we are working on it, and the line is to get clean to some extent. We will be operating one well only.
So if I understand correctly, there is no problem with D1 well. It is just the export line which cannot take more volumes to be exported to our customer. Am I correct?
Export line to pump the oil actually. Because what is happening is, this is the facility, the heater treater, the volume will go up if I am not able to pump the oil which comes out. Suppose if it is a 50 barrel is my ability to pump, so I cannot produce more than 50 barrels.
Okay. Okay. And what exactly is wrong with the export line? Is there some sea surface material there, or is it like some waste product which has choked it, or what is it exactly which is causing this?
We are expecting some wax formation there into the line.
Okay, and is this a normal occurrence?
The paraffin actually, paraffin it's a paraffin which is in the crude. When you keep the oil therein for a longer period, the paraffin sets in the walls of the flow.
Okay, so does that, this occurrence is very normal to happen even to the new equipments?
It is occurrence is normal because you remember that after July 14th we shut it down. We reopened the wells only in the month of 1st of November. There is a substantial period of 4 months we had that.
So how did you solve the problem that time if this is the same problem currently?
No. What happened, paraffin deposit was there. Then what we will be able to pump around, say, 70-80 barrels. We thought the line is clean. Now we wanted to pump more. Then we found out it started choking from 80 barrels, 70 barrels, 60 barrels, 50 barrels, 40 barrels, and 30 barrels. Now we made a partial clean. Now end up to somewhere around 60 barrels at the moment. So we will be further cleaning up through the different process. We are talking to experts, chemical processing, or by putting some hot water or some other treatment. So that is being investigated by the chemist as well as our own team at the moment.
Okay. And I can only say that had you been on the board would be more helpful. But I'm sure like your team has been, Mr. Jiva and you has been really, really getting this ship sailing well along all this time. So missing you by Mr. Jiva would be a big thing, because I remember you guys were together in Hardy Oil also, right? Read somewhere on the internet.
We were together in ONGC. I still hope we will be together.
All right, sir. Thank you so much for these answers, and all the best. All the best. And thank you for the patience.
Thank you. Our next question is from the line of Vishal Prasad from VP Capital. Please go ahead.
Thank you, sir. Only one question. So for B80, when things are fine and we are able to sell gas and oil, so given current price, what percentage of revenue will go to Government of India?
I'm not interested to give any revenue projection at this stage. We have to stabilize.
No, I'm not asking about the revenue. I'm asking, there is a formula based on which you will pay Government of India the royalty. So if it is today, what percentage of revenue will go to Government of India? That's what I'm trying to understand.
No, that is 10% goes as a royalty to the government on whatever the price we are getting. Then balance is about the range between 10 to 45%. 10% minimum, and then 10 to 45% more than $10,000. So it's basically a progression, you can arithmetic progression you can look at.
So between 10 to 55, that's the possibility.
That's right. So if they have about $100,000 revenue, that would be added by about another 4%.
But we will try to keep it between 10 to 12%, or how we are thinking?
No, we will go up to 30% to the government. That's what 25% to the government. So we will ramp up the revenue accordingly, depending on the production which we get from the field.
Okay. Thank you, sir.
Thank you. Our next question is from the line of Jaishal Shah, who's an investor. Please go ahead.
Only one request. Can we not delay?
Sorry to interrupt. Mr. Shah, may we request you to use your handset, please, as your line was not clear, sir.
Yeah, I am on handset only. So if you can at least for a time to that.
Mr. Shah, your line is not clear, sir. May we request you, if you could go close to the network area and then maybe ask a question.
Yeah. What I am saying is that one year which.
Let's move to the next question.
Mr. Shah, may we request you to rejoin the queue, please, as you're not audible. Thank you, sir. Our next question is from the line of Satish, who's an investor. Please go ahead.
Yeah. Am I audible?
Yeah.
Yes, sir.
Yeah. So, like, I've been watching the performance of the company for the last 4-5 years, and then what I see is like we are always one step forward and 2 steps backward. The reasons could be different, like challenges in the production line, operational issues and issues. So are these challenges which you as a company are facing, were they all unanticipated? Are they all accidental? Or what is the reason for these issues coming up?
So, Mr. Satish, these oil and gas companies are basically valuing the assets below the subsurface, right? These assets are continuously growing in the company. You can look at the reserve base of the company 7 years back and the reserve base of the company now, right? So every quarter there is an increase in revenue, decrease in revenue that happens. Yes, you are right. One step we go forward, we are getting back 2 steps. But this is all a temporary phenomena that doesn't change the underlying value of the company per se. Okay, the underlying value of the company is in a continuously increasing mode that will continue to grow more and more. That's what we can say.
So my second question is like you said that one of the reasons for the reduction in the production in B80 is because of the accumulation of paraffin in the passage pipes or whatever it is. Okay. So is this not a phenomena which is faced by the other producers for which there is no standard solution available? Because what I hear from you is like you are still trying to work out the best possible way of coming out of this issue. So is it an issue which is very unique to this company?
It's not unique to the company. It is a year-old, 100-year-old issue there on to all the oil and gas pipelines. But in our case, what has happened? We have no other option but to leave the oil there in the flow line in the month of July 2022. That has kept there for 4 months. Then subsequent to that, we look at as at the moment, we are doing the flow improver and PPD therein. We were expecting the PPD pump therein would have helped as such, but that didn't help as such. So that's the reason now we are changing the PPD, flow improver and all sorts of things now. So this is a regular phenomenon in the oil and gas industry, and we know the ways and means to get rid of it. But unfortunately, we want to restart the production quickly, and the period is there also in the monsoon. So that is the reason we cannot get open the line at the one end, at the plumb end as such, to flush the line completely.
So one other question of mine, like you've been saying that many of the operational issues which you have been facing, you are going to plug out those issues maybe in a span of 8 to 9 months. Most of the issues you have mentioned the same timeline. Is there any way by which the timeline can be reduced?
So at the maximum timeline, we are making our efforts to get it reduced. And it could be less as such that say at least tomorrow you should not ask me this is everything is clean, actually everything is done. Again, you get into something. So we are doing our best as such to get the things. The 9 months time should be the reasonable time according to us, maximum reasonable time. And we should be able to crash it if we are getting the different people working on that. So you have to look at the 2 months time, we can't do anything. That is September and October. That 60 days is already gone. The balance time available is about 7 months. So that's the reason I put. We may crash it a little faster, but better to have a little conservative with 9 months.
Okay, so my last question is like, because there has been a good amount of production loss happening in Q2, so whether the production from different fields in terms of oil and gas and all put together, will that be lower than Q1 or better than Q1 for the Q2?
I cannot say at this stage. Either way, I will be wrong because we have to see the field performance and the offtake issue at the Assam. That has to be seen. And then the production comes from the BAT field with the issues thereon. So I can't predict any number there at the moment.
Okay, you can't even say whether it would be less or more or as compared to Q1.
That's it.
Okay, thank you.
Thank you. Our next question is from the line of Tejas Shah from Laser Securities. Please go ahead.
Yeah. Just one request to Mr. Elango, if you can prolong his retirement by a year. So at least whatever the most difficult part of trying to work around is taken care with under him or along with Jiva sir. And then after a year we can renew. And another thing is, can we not look at JV with the international company who will be more than interested, as we are having a lot of interest in a lot of producing fields. So just as a thought, because even Jiva would retire after some time, because I think when he's 55, 60, I suppose. So are we not looking at exploring on those aspects also?
Thank you. We noted your suggestion. Thank you. Let's go.
Thank you.
We'll take one last question and then.
Yes, sir. Our next question is from the line of Ashwin Reddy from Samatva Investment. Please go ahead.
Yeah, hi sir. Thank you for the follow-up. I just had one small question if you couldn't answer that. So would Mr. Elango remain as a shareholder in the company or would he also be exiting the company? I was just curious about that. That's all.
No, I'll remain a shareholder of the company.
Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that brings us to the end of our question and answer session. I would now like to hand the conference over to Mr. Elango from Hindustan Oil Exploration Company Limited for closing comments.
Thank you. We've noted all your suggestions, observations, and questions. I think we've made our best efforts to answer them, but we take all your feedback seriously and we'll continue to work on that. Thank you for the support. Thank you.
Thank you. On behalf of Hindustan Oil Exploration Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.